Good morning. Welcome to CupO'Forex. This is David Frank with your daily video analysis for Friday, the 7th of November. Happy Friday, everybody. What a fun week we had. And we still have a lot of stuff going on today as well. Yesterday, the European Central Bank and the Bank of England left policy rates the same. They made no changes to their prime lending rates, and they also made no changes to their asset purchases programs. However, Mario Draghi did make some decent comments and was fairly dovish. This helped the equity markets throughout the world. U.S. Equity markets closed at record highs thanks to those comments, as well as a upbeat employment change number. It came out less than expected, which means everyone is now expecting today's non-farm payroll to come out much better than we hoped for. We will be looking at that in a few seconds. Today, Asian markets are also higher, mainly thanks to one, what the ECB said yesterday in their statement, and two, the People's Bank of China injected cash into their economy today. That made investors happy. All right, let's take a look at Friday's economic calendar. Like I said, we started on a bang this week, and we're going out with a bang. All eyes are looking at the United States later today. We will get at 13:30. We will get not only the non-farm payrolls, which we're expecting to come out stronger than expected, which should put at 231,000, but we're expecting that to come out stronger than expected, like I said. But we also get the employment rate, which has been dipping. We're now at 5.9%. We expect this to either stay at 5.9% or come out a little bit lower. Not sure yet if the unemployment rate is falling due to a shrinking labor market or because the labor market is picking up steam. Not too convinced yet. I want to look into that a little bit more. Also coming out today out of Canada at 13:30, about the same time we get the U.S. unemployment rate, we get their unemployment rate. We're expecting that to stay virtually the same at around 6.9%. It's been hovering around 6.7 to 6.9% over the last few months. Also today at 13:30 hours, we get their net change in employment. We're expecting that to come in at minus 5,000. Also today, we just had this morning the Reserve Bank of Australia monetary policy statement. Really nothing changed with them, and markets were boosted as because of that. Also coming out, actually just happened. We had a FOMC member speech. Really didn't get anything out of that as well. More importantly, coming out today, later on today at 13:30, we got the U.S. non-farm payrolls, and we got the unemployment rate. I want to take a look at some technical analysis right now. Okay, let's get started with our technical analysis for today. First off, I want to look at the Forex markets. Let's look at the Euro-Dollar Forex pair. I talked yesterday that the ECB made no changes and did nothing really to support the euro was going to fall. Apparently, I was correct. They didn't say enough. And Forex investors are not too happy. We are firmly below the 1.25 technical level, and we're looking at supports now. Let's take a look at the hourly chart. See what's happening with the some daily trading right now in the Asian markets. We are trading at around 1.2350, just above that technical level, and we're oscillating a bit. I think if we hold here, we'll trade sideways for the next couple of days. But while we remain below 1.25, we're firmly bearish in this market. The ECB has to do more. I also want to take a look at the pound dollar. The Bank of England's policy statement and making no change to interest rates. Well, it's kind of expected they make no change. I think Forex investors wanted them to do something a little bit more. And we're now below the technical level 1.60 and trading lower there. Let's take a look at the hourly chart really quick to see what's happening here. And as you can see, we are oscillating just below a 1.5850, which is another minor resistance level. It was a support level. Now it's a resistance level. 1.60 was a key support. Now it's a key resistance level. We're going to be also watching the pound dollar. To end today, I want to take a look at gold, my favorite yellow metal. Oh yes, since forming a bearish candlestick a couple days ago, we are still moving lower. We're at a price level we have not seen in nearly 10 years. We're now just below 1138.00, which is a key support level. We're just above that right now. Let's take a look at the hourly chart and see how traders are moving right now. We're seeing some dojis forming here, which is a sign that we could have some oscillation at this right above the support level 1138. So let's watch 1138 closely. If you break below that, that will be even more bearish. Okay, that takes care of today's technical analysis and today's video. Have a great weekend. We'll see you on Monday.